Hey everybody, it's me, Gregory Mannarino, back for my post-market wrap-up for this freaking lovely day. What is today? January 31st, 2018. That's how flustered I am. What a day. I mean, what a ride. It's just unbelievable. Off the Richter scale. You know, I like to use that term. Let's just recap what happened today. We're going to talk about the Fed. This morning, stocks were off to the races, vaulting higher. The Dow Jones Industrial Average was up 260 points at one time. And then something happened. What was that something? Well, the bond market started to rear its ugly head again. We had buying, epic bond buying, and you saw what they did this morning. I mean, it was incredible. The chart on my website, traderschoice.net, go have a look at it. Then bonds just started to sell off. The U.S. 10-year yield today at one point was 2.75. The market did not like this at all. I mean, the red line appears to have been drawn in the sand here, and it's presenting a problem for the stock market. The spread right now between the 10 and the 30-year debt note is 23 basis points. That yield curve continues to flatten out. So after all this euphoria in the morning with cash moving into the stock market, Dow up 260 points, the Dow Jones Industrial Average finished up 73 points. It was negative at one point today. Just a bizarre ride into, like, I don't know what you want to call this, like the pit of hell or something. And this, the Federal Reserve. The Federal Reserve. Let's talk about the Fed today. So we got the minutes, came out. Of course, no rate hike, even though our economy is going on like gangbusters. They just can't raise rates. They can't even raise the federal funds rate 0.25%. And no one expected this to happen, not even myself. And I did explain to you that I do believe we have one coming in March. And that's what's rattling the markets. And that's what's being reflected in the bond market that is driving stocks up and down like a roller coaster. So look, here's the situation for myself. These are the positions I am sitting in. I am still holding that position on Goldman Sachs. Did finish down again today, not by much. I bought puts here against the S&P 500 right here, SPY, March in the money puts. These are down a little bit right now. You know, look, this trying to find a direction here is dependent 100% on the bond market. Now, we're going to need to watch this over the next couple of days. If it appears that the Fed is lost control of this bond market, and how do we know that's happening? If we're starting to see this sell-off occur in the bond market, which they cannot stop. Understand, this morning, who would be out there pouring cash into the bond market while stocks were up 260 points to keep the bond market stable? Like I talked about earlier, it's the banks, it's the Federal Reserve. Now, we all understand that they are going to lose control of the bond market. They've already lost control, in my opinion, and they have thrown everything they can possibly at it to try to keep the bond market stable. I mean, the world economy depends on it. But there's a price to pay here, and the Fed actually discussed this during their minutes today. Inflation. Whoa, who does that sound like? I've been screaming the inflation alarm for quite a while now. Now the Fed is saying we should expect inflation to kick in. It's incredible, people. So think of the environment. We have inflation that we're all going to face. There's no doubt about it, 100%. Even the Federal Reserve is talking about it. Dollar's going to fall under pressure. And interest rates are going to go up. Great scenario for the average Joe out here, isn't it? It's unbelievable, people. It's unbelievable what we're watching here. We have a stock market that is so twisted and so distorted. It's in a mega bubble because of the actions of runaway central banks, none more so than the Federal Reserve. Doesn't know what to do. But even incremental changes here in debt yields is wreaking havoc on the market. And you can see what's happening here. The red line is in the sand, in my opinion. If we see Let's watch this overnight too and into tomorrow. That 10-year yield continued to rise and the spread between the 10 and 30 continued to narrow. That is the red flag of red flags. It's the truth here in a distorted market like this. That is why I took up this position here against the S&P 500. A lot of you have been writing to me, hey Greg, when are you going to short the market? Well, look, maybe here. Now again, as usual, I took up an initial position here. I will add to it later on if I feel the need to, or if it moves in the right direction, then I will add to it. I did not do that with Goldman Sachs, if you recall. I added to it, maybe, more than likely at the wrong time. That's okay. I'm still holding that position. I still think, at least at this point, it is going to rebound. Could be wrong. Hedging my whole trading portfolio here with these puts on SPY. We'll see how that plays out moving forward. For all I know, both of these are going to lose. I don't know. We just got to, this is a game of risk. And you all know, and I'm going to set myself up for this again, I am due for a loss or 2 or 3. I am running way over my long-term success rate. And when that happens, I start to get a little nervous. There's no way to beat the numbers moving forward. Anyway, with that said, let's see how this plays out tomorrow. Going to be interesting, I can promise you that, and I'll see you in the morning. Over and out.